Babatunde Obaniyi, Principal Associate at UBA Capital, joining us now from Lagos. That's to discuss the implications of the delay in signing of the 2013 budget by President Goodluck Jonathan on the economy. Babatunde, thank you so much for your time. So just let's take a look at why there has been a delay. And of course, it seems that Senate is in a rush to get this passed. We saw a vote going through there yesterday, more than 2/3 majority needed for that. But what has been holding back the president in signing this critical document?
Thank you very much for having me this evening, Samantha. I think there are three main issues that are holding the president back from signing the budget. The one is the benchmark that was proposed by the executive, that's the presidency. There's a discrepancy of like $4 in the oil benchmark. That's one. The second one is the zero allocation of funds to the Security and Exchange Commission. Also is the issue of constituency project for the legislator, and additional $63 billion that was added by the legislator to what was sent by the presidency. But we pretty much think that this should be resolved quite soon, because what we have seen in this last presentation of budget has been unprecedented in the history of this country. We have the president presented the budget to the legislature on the 10th of October. I mean, that was like 2.5 months before the end of the budget that was running, which shows a lot of zeal and enthusiasm on the part of the government, and shows some seriousness that the executive arm really want this to be passed as soon as possible. And going by the implication that we have, because the economy is structured in a way that the government is still the biggest spender, and anything that the government does really cascades to all the sectors of the economy, meaning that people are waiting to see the direction of spending of government, how it affects all the macroeconomic units. And I think it's so important that this is resolved, but we are quite confident that there will be a truce, and we expect that this will be resolved in the next couple of weeks.
I mean, weeks is certainly surpassing the deadlines that have been put on the table for yesterday when this bill should have been signed. I mean, it creates a sense that there is perhaps a disjoint in government, and that could shake investors, don't you think?
Sorry, can you say that again for me, please?
The fact that this has been going on so long, and this is of course not the first bill that has been delayed. We know that the petroleum bill is one to point out there, but this of course a critical legal document that needs to be passed. Did you think that this could shake foreign investor sentiment, shake investor sentiment when it comes to the Nigerian economy at all?
I could barely hear you, but from what I guess you're asking, you're trying to know the implication of the delay on the economy. Like I said earlier on, that the government is still the biggest spender, and that dictates they dictate the chart for which other players in the economy to follow. And like I rightly said, that it's critical for them to resolve this as soon as possible, to make sure that everybody has a clear sense as to the direction of government spending, which critical sectors is the government focusing on, and that also cascade to how the macroeconomic agents in the economy plans and how they map out their strategy for the fiscal year.
I mean, just even the finance minister, Ngozi Okonjo-Iweala, basically saying that those who thought that it would be signed this week should know that it's certainly not possible. A lot of work needs to be done. You pointed out those three factors. How do you think that they could arrive at a truce on those three principal issues? Of course, the oil benchmark being one of them, with regards to being able to make sure that they sign this document in the next few weeks?
Well, I think at this point, what we will likely see, because everybody knows the implication of delaying of the signing of the budget. I mean, constitutionally, the executive has the leeway to spend or extend the previous budget by 3 months. And that means that expires by 31st of March 2013. So there is really much pressure on both the executive and the legislature to finally find a midpoint. And that's why we are seriously optimistic that something will be done very, very soon to agree at the midpoint to resolve the differences and get this budget signed as soon as possible.
Mm-hmm. Well, let's turn our attention to a shorter term issue that is inflation. Of course, we know that it has been a concern and it has been ticking up. So what are your expectations on the inflation print we're expecting out on Monday?
On the Monday, the 18th of February, we expect the National Bureau of Statistics to publish the inflation rate for January 2013. Our expectation is we're likely going to see a bit of drop. I mean, maybe by 20 basis points in inflation rate on the back of the increased productivity we've seen in the economy. And we all know that the spending patterns of consumers in the markets is that towards the end of the year, around the festive period like December, you see a lot of spending, which automatically comes down in January. And funny enough, we had the inflation rate even come down from what we had in November. So we are pretty much optimistic that that trend will be maintained, and we believe that the inflation rate will go down by 20 to 30 basis points by the time it's announced on Monday.